ARM Holdings' risky strategy. Will it pay off or blow up for investors? ARM Holdings has just made a radical move that could either skyrocket its success or crash and burn in front of investors. If you're invested in the semiconductor world or thinking about jumping in, you're going to want to hear about this. The stakes have never been higher. Hi. In today's video, we're going to explore ARM Holdings' bold new strategy that could change the game or lead to major regrets. We'll dive into why the company is shifting its focus from licensing to actually making its own chips, and whether this new gamble will pay off or flop. Welcome to the Finance Savvy. Thank you for watching. And if you're new to the channel, please hit that subscribe button for more updates and insights on the latest in the tech world and beyond. Let's dive into the video. ARM's radical strategy shift. The road to AI dominance. ARM Holdings has been one of the standout stories in the tech world since its public debut in September 2023. ARM's stock price has tripled from its debut at $51 per share to a current $159. Investors have been riding high on the belief that ARM-based chips, renowned for their low power consumption, will dominate AI data centers in addition to their success in smartphones. ARM's traditional business model has been built around licensing its chip designs to other companies like NVIDIA, Apple, and Qualcomm, earning royalties for every chip that gets sold. It's a capital-efficient model with low risk, basically the opposite of developing and manufacturing the chips themselves, which requires significant capital investment. But recently, something has changed at ARM, and it's huge. The company has announced a major strategy shift. ARM is moving from licensing to actually manufacturing its own chips. According to recent reports, ARM is recruiting top talent from its biggest customers to create its own data center-specific chips. The company is expected to have these chips ready by the summer of 2025, and it's already secured Meta Platforms as a first customer. The bold vision behind the move. At the heart of this change is Masayoshi Son, the chairman of SoftBank, which owns 90% of ARM. Son has been vocal about his vision for the future, predicting that artificial superintelligence will arrive by 2035, requiring an unprecedented $9 trillion investment. According to Son, this will require the construction of massive AI data centers using 200 million chips. This level of ambition might be exactly why ARM is taking this risky leap. Instead of just profiting off royalties, Son seems determined to position ARM at the center of the AI revolution. But is this the right move? While this strategy may seem visionary, it's not without risk. ARM will now be directly competing with its current customers, including companies that already design and produce their own chips, like Amazon, NVIDIA, and Apple. If ARM becomes a direct competitor, will these companies stick with ARM's architecture, or will they look for alternatives? The big gamble. Competing with the giants. Historically, ARM-based chips have been known for their low power usage, which made them ideal for smartphones. But as AI applications and data centers have grown, the power requirements have increased dramatically. x86 architecture, the dominant architecture for high-performance chips, has been closing the gap on power efficiency, and with companies like Amazon announcing they'll design their own Xeon processors based on x86, ARM's position is more precarious than ever. The big question is whether ARM will be able to execute this plan without alienating its existing customers, who may prefer to partner with a neutral third party like TSMC instead of a competitor. Plus, ARM faces an uphill battle in terms of creating chips that can handle the massive computing requirements of AI data centers while also remaining competitive with established players. Son's vision versus reality. Is ARM overextending? It's clear that Masayoshi Son is placing big bets on AI, possibly to make up for SoftBank's previous tech missteps. For example, SoftBank sold its $4 billion stake in NVIDIA in 2019, and if it had held on, that stake would be worth over $150 billion today. And while ChatGPT exploded onto the scene in late 2022, SoftBank had no meaningful AI investments, which may be why they're now making this bold move with ARM. But is this a knee-jerk reaction? Is Son chasing AI to make up for past mistakes rather than following a well-thought-out, sustainable strategy? ARM's new plan could either lead to tremendous growth or massive failure. It's a boom or bust situation, and investors need to be cautious. On one hand, ARM could become a central player in the AI revolution if it succeeds. On the other hand, it risks competing with its customers, which could limit its future appeal in the chip market. Conclusion: what investors need to watch for. So, what does this mean for investors? It's time to keep a close eye on ARM. If the new chips perform well and customers like Meta continue to buy in, ARM could see a major shift in its business model, opening up new revenue streams. But if the chips fall short or competitors like Amazon and Nvidia ramp up their own development efforts, ARM's gamble might backfire. Before jumping in or out of ARM holdings, investors should keep a close watch on whether ARM's customers stick around or decide to take their business elsewhere. If ARM becomes the go-to chip supplier for data centers, the rewards could be huge. But if its competitors outperform, it could blow up in ARM's face, much like some of Sun's past ventures. Speaking of big bets on the future, we've got another fascinating story coming up in our next video. If you had $10,000 to invest, would putting in IonQ make you a millionaire? Trust me, you won't want to miss it. Stay tuned. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights. Got questions or thoughts on ARM's bold strategy? Feel free to reach out. We'd love to hear from you. See you in a few seconds. Could $10,000 in IonQ's quantum computing revolution turn you into a millionaire? Imagine investing $10,000 in a company that's working to unlock the future of computing and potentially turning that $10,000 into $1 million. Is that just wishful thinking? Or is IonQ, the leader in quantum computing, on the verge of making it happen? Stick around, because today we're diving deep into whether IonQ could be the next big investment you don't want to miss. Hi! In today's video, we're going to explore IonQ, the quantum computing leader that's been making waves in the tech world. Could a $10,000 investment in this cutting-edge company really make you a millionaire by the end of the decade? With the potential to revolutionize industries like AI, pharmaceuticals, and even cryptography, IonQ has captured the imagination of investors everywhere. Welcome to The Finance Savvy, where we break down the latest in finance and tech. So make sure to subscribe to stay up to date on everything you need to know. And hey, if you have any questions, drop them in the comments. We'd love to hear your thoughts. Now, let's dive into the video. The quantum leap. What makes IonQ special? IonQ isn't just another tech company. It's leading the charge in a field that could change everything: quantum computing. If you're unfamiliar, quantum computing uses the strange and fascinating principles of quantum mechanics to process information at speeds that are light years ahead of traditional computers. This could open the door to breakthroughs in fields ranging from medicine to AI and beyond. Now, IonQ has been on many investors' radars for a while, and there's good reason for that. Since its IPO, the company has made impressive strides, attracting attention for its quantum computing prowess. But here's the big question. Could an investment in IonQ be like the next Nvidia, where a small stake today could turn into millions by 2030? Stiff competition, but IonQ has big moves. Before we get too carried away, let's talk about the competition. IonQ isn't the only game in town. Tech giants like Nvidia, Alphabet, IBM, and Microsoft are all working furiously on their own quantum computing efforts. Nvidia, for instance, has a long history of dominating the chip industry, and it's hard to overlook the massive financial resources these companies have at their disposal. But here's the thing. Money isn't always the deciding factor. Sure, these tech giants can pump billions into quantum computing research, but IonQ has something else going for it: agility. The company has that scrappy startup energy that could help it stay ahead in the race. IonQ's $54.5 million contract with the U.S. Air Force in 2024 proves that its technology is no joke. And with contracts like that, IonQ is positioning itself as a serious player in the quantum computing field. Still, IonQ faces an uphill battle in terms of funding compared to its larger competitors. As a non-profitable company, IonQ has to rely heavily on outside investments to fuel its ongoing development. But with the right breakthroughs, it could find itself at the center of a quantum computing revolution, and that's what makes it so exciting for investors. Will quantum computing change the world? Now, let's talk about the big timeline. When can we expect quantum computing to be useful? This is where things get interesting. NVIDIA's CEO Jensen Huang threw cold water on the quantum hype earlier this year, predicting that useful quantum computing is still at least 15 years away. But IonQ CEO Peter Chapman isn't having it. Chapman's bold claim is that IonQ's quantum systems are already delivering useful insights. IonQ's hashtag AQ36 system is already providing value today, and Chapman believes its upcoming hashtag AQ64 and hashtag AQ256 models will deliver even greater business value in the near future. IonQ believes that quantum AI, the ability to harness quantum computing to power artificial intelligence, will be vastly superior to anything possible with traditional computing. That could give IonQ an edge over its competitors, especially in fields like machine learning, cryptography, and optimization problems. And here's the real kicker. IonQ CEO believes the company will hit $1 billion in revenue by 2030 and will be profitable by then. If IonQ achieves this, it could prove that quantum computing has entered the mainstream and that the company is one of the leading players in the space. The big million-dollar question: can you turn $10,000 into $1 million? So, here's the ultimate question. Could a $10,000 investment in IonQ really turn you into a millionaire? The quick answer is maybe. If IonQ can indeed deliver on its ambitious growth plans and become the leader in quantum computing, then yes, early investors could stand to make a fortune. However, there's a huge risk. Quantum computing is still in its early stages, and there's no guarantee that IonQ will be the company to dominate the space. At the time of writing, IonQ's market cap stands at around $8.36 billion. So, to turn $10,000 into $1 million, the company would need to grow to a market cap of $836 billion. That's a massive leap, and while it's certainly possible for IonQ to grow significantly, it would need to beat some stiff competition and make groundbreaking strides in the quantum computing world. For comparison, companies like Taiwan Semiconductor, which produces traditional chips, are valued at around $1 trillion, despite only generating $90 billion in annual revenue. So, IonQ's journey to becoming a $1 million investment could be just as wild and unpredictable as the quantum world it's trying to master. What does this mean for investors? If you're an investor looking for the next big thing, IonQ could be a high-reward, high-risk opportunity. Like the early days of NVIDIA, there's a chance that IonQ could unlock the future of computing, and if it does, you could see your investment grow exponentially. However, there's also the chance that the company could falter in the race against the big boys, and that could lead to massive losses. For those with a long-term horizon and a strong risk tolerance, IonQ could be an exciting stock to watch. But remember, the road to quantum computing dominance is long and full of obstacles. Conclusion: is IonQ worth the bet? So, could $10,000 in IonQ turn into $1 million? The potential is there, but it's not a sure thing. If IonQ wins the quantum computing race, it could be one of the most lucrative investments of the decade. But remember, it's still a highly speculative bet, and the journey ahead is filled with uncertainty. Stay tuned, because in our next video, we'll explore the exciting world of AI and quantum computing even further, and show you how to make smart investments in a rapidly evolving market. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights on the latest tech investments and finance trends. Got questions or thoughts about IonQ? Drop them in the comments. We'd be happy to help.